Ladies and gentlemen, how are we doing? Matthews here from M&A Forex Traders. I hope you're doing great. So we're here with a beautiful trade breakdown or recap of the trade that we took, which turned out to be a loss. All right. So if you want to know exactly what happened and what made me take this particular trade and why I think this particular trade failed, watch the rest of the video to find out. All right. Okay. So let me just show you everything that actually happened for me to actually take this particular trade. So let's go back to the weekly time frame. All right. So the first thing that you always have to do is determine the overall direction of the market. Know what is the overall direction of the market, and you want to trade in the direction of that particular market. Very important. So for this particular trade right here, this is Euro NZD on the weekly time frame. You can clearly see that this market has been in a downtrend for a long time, right? So we've figured that out. Therefore, our bias is what? Bearish. Let's go to the daily time frame. It's always important. This is what we call multiple time frame analysis. It's always important for you to analyze your pairs from the top to the down. All right. So start from the higher time frame, go to the lower time frame until you actually find uh, why you want to take that particular trade. So it's extremely important. So we are on the daily time frame. Right now, we can clearly see that the major trend is actually still down. So you can clearly see that this market has been going down for some time. All right, so let's go. So therefore, the idea is that you want to go in the direction of the major trend. So let's go back to the 4-hour time frame right here. You keep going down until you find your areas of value. Once you find the area of value, of course, you're going to predetermine that and also go to the lower time frame until you find a level where you're likely going to enter right there. Okay, so extremely important. So here we cannot identify anything really. So let's go back to the 30-minute time frame. So very important for you to know what's happening on this particular time frame so that you are able to trade in the direction of the trade. So this is what happened here. So we had a nice rally-based drop supply zone, which changed, which we had a break of structure right here. And clearly we followed that up with beautiful momentum candles right here, which kind of broke the structure and created a new lower low. And once we see that, what happens? And you can clearly see again here we had a liquidity which was created right here, trendline liquidity which was left right here, and then right here is a rally-based drop supply zone. So when you see something like that, we actually wait until we have more confirmation before we can actually enter into a particular trade. And what happened is that the market initially came to this level right here and dropped a little bit. We didn't enter into this particular trade. We waited for a confirmed entry. Okay. So the first one would have been an aggressive entry. The second entry is going to be our conservative entry on this particular pair right here. So by the time I was looking at the market, it was around this level right here. Therefore, I was looking for the market to pull back into that area so that we can sell. So what ended up happening was that the market actually came to this level, pushed to this level right here, and you can see here, we had a nice reaction right here. Okay, we had a very good rejection at this level right here. Right here, we had a very good rejection right there. That's the one that actually prompted me to actually go in for a sell. So you can clearly see that immediately we entered right here. The market did be pushed up to this level right here, and then it pushed to the upside, and we were taken out. So let me just show you the signal that was sent to our private community right here. Right here. So you can clearly see that we had a rather best drop supply zone, we had liquidity which was left behind right here. Then we had this level which came to this, it came and touched our level right here, dropped a little bit and pushed back. So always want to actually we usually have this kind of setups where the market is retracing for another entry at this level right here. So what happened that I spotted a setup, a rejection on the lower time frame, which prompted me to actually sell this particular trade. And what ended up happening was that the market pushed a little bit, almost like 1 hour, and then pushed to the upside, and we were taken out. So the stop loss was like 12 pips, and our target was like 170 pips. And yeah, this trade ended up going against us, and we lost. You can clearly see that after we sent the signal, the market dropped a little bit up here, almost 1 to 1, and then the market pushed to the upside and took us out for a loss. All right. So these things are going to happen every time and then. These things are going to happen. So it's always important that you are proactive in terms of your risk management. You know exactly how much you're standing to lose on that particular pair before even taking a trade. You're supposed to predefine your risk because losses are going to come. You're going to have losses, and the losing is actually one of the most constant things that's going to happen to you, especially in the market. Therefore, you're supposed to get idea. I mean, you see, you are supposed to actually um have that in mind. Make sure you have that in mind, and also know that you're going to lose. Therefore, you're supposed to be ready. You're supposed to prepare yourself when those things come, because this is inevitable. It's not like it's always going to happen. So you are supposed to be equipped with tools to actually help you uh, survive those losses, because those losses are going to come. And one thing you realize that when losses start to come, they actually uh, tend to actually be a lot of them, right? So it can tend to be a losing streak. So make sure you are prepared, and when you notice that you're in a losing streak, make sure that you actually reduce your risk on the particular trades. Make sure you're reducing your risk so that you only start to use your usual normal lot sizes when you are back on your winning streak, right? So it's always important. Make sure you know exactly how much you're standing to lose before placing any particular trade. You always have to remember that at any particular time, a trade can actually go into your direction, and at any particular time, you can actually lose that particular trade. So everything works in terms of probability. It's all probability. So you're supposed to understand that, and once you get that, therefore you're going to be objective in identifying your age. You predefine your risk. You will let the market do what it has to do, because you have a proven age which you've been back tested and forward tested, and it has shown you that it has a positive expectancy over a series of trades. Remember, I'm emphasizing it's not over a trade by trade basis, but rather over a series of trades, which is extremely important. And once you understand, you won't have unrealistic expectations on a trade by trade basis, because you understand that anything can happen. And that is extremely important. You have to get that for you to actually be able to survive the losing streaks that are going to actually come. All right. So I hope you found some value in this video. Very important. I thought I would share with you guys. It's always you always have to know that losses are always going to come. And if there's one thing you can be ready for, is this: losses are going to come, and you're supposed to prepare yourself psychologically when they tend to happen, because if you don't, you will fall prey to things like revenge trading, FOMO, and all those things. All right. And when you start to notice that you're having a lot of losses, you can actually step a little bit down and see how the market is responding. Maybe your age at that particular time is not playing out. So give yourself chance to actually observe what the market is doing, so that you don't end up self sabotaging. All right. So you guys take care of yourself, and until next time.